Elaine Kub is our corn and soybean market analyst this week. The USDA believes U.S. farmers have increased both their corn and soybean acres since the agency's latest projection. The USDA's Acreage report, released Thursday, shows the country's growers bumping corn acres from 93.6 million to 94.1. It also sees soybean producers scaling acres up from 82.2 million acres to a record 83.7. The agency's quarterly grain stocks report tallied corn stocks up 6% from a year ago and soybean stocks up 39%. We talked with Elaine Thursday afternoon and started by asking for her thoughts on the latest numbers.
I think it's heartening to see that there was obviously some volatility right at the very beginning, like the microseconds after the report was announced, soybeans went from being double-digit down to being double-digit up. So it was a volatile day, but then the markets just kind of reverted into, normal fundamental patterns. So that was heartening to see that we're not too crazy there. And the takeaway, though, of the overall report, or of the overall performance by the end of the day, is that soybeans are the star of the show. They're definitely the leader. And new crop soybeans at that, those closed the day up 40 cents, whereas the nearby stuff really only closed up 30 cents.
Is my interpretation then that close, that high up, is not necessarily because of the reports? I think that's exactly what's happening here. It's kind of like that Brexit phenomenon where the markets are waiting and waiting to get these numbers or to get this result. But once the result is in and is known, once that information is known, now the markets, these are futures markets, the markets have to turn back to what is going to happen in the future. And for soybeans in particular, that future is looking dry. I mean, there's this La Nina looming threat for the late summer of dryness, and there's dryness now. There is some precipitation in the forecast for this upcoming week, but it's not going to hit some of the spots that are, most concerning folks in Iowa, even eastern South Dakota here. So I think the future is probably more bullish than these reports were, obviously. I think a lot of people, Elaine, were thinking that soybean acres would increase, but not necessarily an increase in corn acres. Can you explain what happened there?
Yeah, that was definitely the conventional wisdom going into this report, is that because during the planting time frame, same as now, the soybean to corn price ratio greatly favored soybeans. Not as much as it does now. Now, looking today, it's as high as these contracts has ever been. November soybeans are now 3 times higher than the price of December corn. But farmers, of course, did not respond to that economic motivation because farmers are going to plant corn for as much as they can plant corn. And most of the noise about prevented planting in the little pockets that had occurred was much later in the season when that would actually be preventing soybean planting more than corn planting. So yeah, the corn acres got in there and the soybean acres got in there, though not quite as much as the market was expecting.
How valuable do you think the grain stocks estimates were?
I think that they are always valuable. These are, direct data that has gone out and measured by the USDA, and that's useful to compare year over year. They were slightly bearish for both corn and soybeans, showing that our disappearance from March to May was less than what the trade or what the market was expecting to see going into this report. But note that quarter we're talking about from March to May, that's missing some of the bullishness, especially for corn, the bullish stories that came in during June. So it's a backward-looking number, it's a real number, it's a valuable number, but I don't think that it fully incorporates some of the bullishness that we've got going on right now for the feed markets in both corn and soybean meal.
Yeah, you hinted at this then in soybeans, but where do we go from here in corn?
Well, I'm not terribly bullish for corn. I don't think there's a lot of upside because, as the quarterly stocks report did show, we're not using this up even as fast as we did last year. We're not on pace to do that. There's probably going to be 14.4 billion bushels of corn. There's going to be plenty of corn in the United States and lots of feed grains around the globe. So I don't see a lot of upside for corn. I do see this continued excitement from the investment side of the market to go into commodities or grains as an inflation hedge perhaps even, but this money could continue to flow in, and soybeans are benefiting from that right now. The entire sector could continue to benefit from that somewhat. So I'm slightly bullish on the entire sector, but I'm not talking about, $5 corn at this point. There's just not enough fundamental drought concern for that yet.
Where do you think the ceiling is on beans?
I think beans could retest their highs. It would be very unusual to see that happen, right? To see the new crop soybean market go up if the new crop corn market didn't do that at the same time. But this year we've seen them divorce already. We've seen them just completely ignore their usual price ratio. So I think it would be possible for November soybeans to get back above $11.75, maybe make a run at $12. That kind of thing could happen, but I'm not going to bet the farm on it. I think that, risk management just should still be in place.
Well, I'll close with this. What do crops look like up in your area, South Dakota?
Well, we would sure like to get some of this rain that's not in the forecast in the immediate term, but we'd like to see some of that. But generally speaking, yeah, it got planted well. It's a good crop. This is not this is not a 2012 crop that we're crazy concerned about at this point yet.